Well, Jarod Dawson from PM Capital in Sydney, visiting New Zealand, talking about his funds. Jarod looks after a fund that is called the Enhanced Yield Fund. Jarod, what's that about? What sort of investments do you have in that particular area?
The fund's designed around the idea of having a cash plus type fund, so a fund that's going to return you a little bit better than cash over time, with a very close focus on capital preservation and absolute returns. So typically the sorts of things that we're investing in are yield securities by nature, so like corporate bonds, hybrid securities, and of course cash. And within cash, we're talking about things like bank bills and term deposits. Within the flexibility of the fund, we're able to invest across the spectrum of all those assets, and in times where we think credit spreads and risk premiums more particularly are pretty skinny, we have the flexibility to be heavily invested in cash, and vice versa when we think, and like we have done over the last sort of 12 or 18 months, when we think that returns are significantly more attractive and risk is appropriately priced, we can be much more fully invested.
During the past year, the managed funds industry has been through quite an exciting time. Going back, 1 year, what was the climate like then, and how are you adjusting to the crisis?
When you go back 12 months, what a world of difference. We essentially had an environment where global economies were on the brink of collapse, if not for some quick and active thinking and policy from major central governments. What we really saw was an environment where assets were being sold under distressed circumstances, and obviously that had a huge impact on prices, both in equity markets and fixed income markets. On the fixed income side, we obviously saw a substantial increase in credit spreads, which represent the risk premium on yield securities, and it created an amazing buying opportunity, particularly funds like the PM Capital Enhanced Yield Fund, where we held previous to that a lot of cash because we were expecting some sort of correction in prices. It was an amazing time to be able to invest, and we were buying assets, yield security, low risk assets at yields of well over 10%.
And in terms of your performance last year?
In terms of the performance, we're thrilled with the performance over the last 12 months. The fund's returning a little over 12% on the Australian fund, and over the last couple of years, we've comfortably outperformed the central bank cash rate by approximately 2%, and that's after all fees. So we're absolutely delighted.
And now, where we sit, in 2010, do we still see the same buying opportunities?
Certainly a lot of buying opportunities around. The distress levels that we saw back in early 2009, which were more reflective of really depression-type spreads when it comes down to it. What we're seeing now is a contraction in credit spreads, but still some great assets and very attractive spread opportunities that the fund can take advantage of.
And looking forward, you're pretty optimistic about this year?
Looking forward, pretty optimistic. You're still looking at a lot of assets returning a couple of percent over bank bills for very high quality companies. In terms of the outlook for the macro economy, both in Australia and New Zealand, we're pretty positive in the sense that we think that a lot of work was done on the policy side by both central banks and governments, and that's created a pretty good platform for the next 12 months in terms of what asset markets are actually factoring in. We think that if anything, the economies will probably surprise to the upside.
And investors in New Zealand, are they investing in Australian dollars, investing into your fund?
The investors in New Zealand invest into our Australian dollar fund, but via the New Zealand dollar pie. So basically, it's a tax portal, so it creates a tax position for New Zealand investors where they pay normal New Zealand dollar tax and invest in a New Zealand dollar fund. But the actual investments themselves are into our Australian dollar fixed income fund, which essentially invests in Australian, New Zealand, and also offshore assets. So it's a great vehicle for New Zealand investors to be able to put themselves in their domestic local tax position, but gain access to broader fixed income markets.
Thanks, Jarod.